Hello. Good morning, everybody. I'm just gonna double check that everything's coming clear here on the stream. Also, I need to do a little bit of management here. Gotta pop out the text chat real quick so that then you guys can see yourselves. Okay, there we go. Everything should be good now. Yeah, see, you guys are there in the chat now. Okie doke. To it. It's a good morning. It's a good new week. Everything is set up for us just to have a nice, chill day. Let's actually jump on into the charts because most of what's just going to happen for this week is China stuff. We're going to get a lot of China news, and that's going to determine whether or not really this set of data is actually going to be useful enough for us to determine our outlook for China going forward into the rest of the third quarter. Effectively, if China begins contracting from here, it's pretty likely that they'll continue contracting, and if China holds steady at their current metrics, either they come in at or above their prior numbers, then maybe China's out of the woods. But the expectations aren't great, so a lot of people are going to be watching these China economic outlooks. Wells Fargo, in their weekly outlook, actually covered quite a bit of China. And you guys can already see here the trade from last week, the last trade that I streamed on NFP, that did get stopped out. But I ran a poll in the Discord. Right. So maybe I'd like to ask you guys here in the stream. You guys consider this good risk management? So think about it like this from the last trade I did. I'm going short here, thinking it'll probably reverse, and it did reverse quite a big chunk of that candle, and then it came right on back up. So I held thinking, maybe it'll get shot down again. But I knew my limit, right? I knew I had to have a hard stop right here because of the probability of going higher. So this stop was 25 pips. And we ended up moving up 66 pips. So the question of was this good risk management or not, I think is, well, if you're here at 25 pips of stop, you're now no longer holding this drawdown of an extra 35 pips. And this will be just another little tiny loss, because when you trade for a day, the time horizon should not be huge for day trading. It should just be for that day. You're probably going to be taking hundreds of these sorts of trades, and sometimes on the same day you'll be having like 5 or 6 day trades open. So what are you going to do positioning wise? What's the sizing of those trades going to be if day in and day out you could be trading tens of times a day discretionarily? Probably pretty small, because in some situations you can go day after day after day of making poor decisions, and that just eat right up into your account. So looking at this, it's like, oh, another loss. It's like, well, boo hoo. It's a super small size for the day. I thought I saw an opportunity, and nope, that's it. You don't let this sort of thing get too big. You'd never let this sort of thing get too big. That's why I like my 20, 30, 50 sizing ratio, where 20 basis points for the first entry, 30 basis points for the next. But even then, I only use that for like not day trading. For day trading, I personally, I go less. Because I could have, again, 3 day trades on, and let's say I use 10 basis points. If those day trades just run away and they make, they double or they triple, if I have 3 of those on for 10 basis points, that's a total of 30 basis points of the account. If they run for double or triple, you're talking about 0.9, a 1% gain in the matter of like a day or two. So that suddenly becomes quite volatile. Even with like 10 basis points positioning, for like a weekly horizon, I like to use the 20, 30, 50. Let's see here. Nice to see you in the chat, Hog. Anyone else want to leave a like, say hi in the chat? And now would be a good time if you want to get recommendations on, not recommendations, if you want to recommend a chart for me to do interpretations on, right? Again, I gotta say, not financial advice, You can't really use the stuff in here as financial advice directed towards you, because none of this stuff is directed towards you. This is me interpreting a chart with my indicators on it. So, as far as today goes on the calendar, is there anything particularly fantastic? We're getting a lot of earnings. A lot of earnings. That'll probably end up moving things. This is my view, long-term resistance on oil. Gotcha. Let's see here. Fed Bostic speaking relatively shortly here. Fed Bowman, although they're speaking in about 45 minutes. And then we have a bunch of things going on there. Foreign reserves in Russia. Used car prices. That'll be interesting to follow as a high frequency value for inflation. So if used car prices continue to decline, that might contribute to inflation's decline. Let's see here. Retail sales, RBA speech later today. Some Japan news, but pretty low priority, except for the current account. Right? Current account. A bunch of Westpac information. A bunch of Australia sentiment stuff. I think outside of Asia Pacific, so that means Japan, Asia, New Zealand, Australia. We have way later in the day, we have inflation out of Germany. Gotcha. Yeah, so outside of that for today, and that's like right at the tail end of the day, this is going to be pretty straightforward today. So let's look at Aussie yen. So that was probably a likely top up here. Yeah, see that. So if I were going to trade this, I'd have the expectation we'd come down later today based off this. Yeah, that was a real good snap to take that at. A real good spot to take that short at. Euro yen. Let's check that out. Still holding on this one because this is technically for the month. Real quick. Does that look good to you guys at all? I don't think so. Here, let me turn on the auto time frame feature. Yep. Yep. I say there's definitely more of a slippery slope to falling lower here. Considering more and more outlooks I read are getting ants in their pants about JGBs and how the yields on JGBs are now going towards the 1% mark, it's yield differentials are still a big factor here. Let's actually turn on the indicator. Yeah, and you can see yield differentials are still negative. How about on Aussie yen? Probably not so much, right? No, still super negative. Even more negative. But you could see on the 5, the 7, and the 10, and the 15. That was also on Euro yen. Same durations, actually. Except it also includes the 30. So there's some short-term flipping on the long-term duration, which isn't really that big of a deal. Maybe if you see like one or two more positive days in the yield differential, maybe it'll be time to change my bias on long yen. But so far, so good. Let's actually check out some charts in equities real quick. Let's check out the ES this morning. The yes. Okie-doke. Wait for our odds to load. Yeah, these things are simulating 10,000 random variables, looking back 5,000 bars, and generating a distribution telling us the probability. So let's see here. This is 39% of the time we top out right around here, and it's quite likely we haven't made the low for the day. It's quite likely we haven't made the low for the day. And yeah, it's like 15% of the time your low comes down in this area right here on the ES. Roughly. Somewhere around here. So there's probably going to be a dip occurring. You could see that the expectations for the S&P last week were very positive. These orange lines are from a survey that I run, actually. And I'm going to be, after the stream, I'm going to be closing the survey. Here, real quick. This survey, under announcements in the Plan the Profit Discord. Now is the last time to go ahead and fill out this survey. And still I actually gotta double check how many people have responded to this thing yet. But I just want to remind you guys, hey, go ahead, fill this out so then we can figure out the trading expectations for the week ahead here. Because I gotta close this out here today. Okie-doke. Let's go back. Oh, forgot to hit transition this thing here. Under announcements, plan to profit, trading assessment. You click on this, takes you to a form where you answer 5 multiple choice questions, and that will be the survey. Okie doke. Back. How about gold? We can use $1. Well, that looks like it'll probably be a low, just looking at those candles, but let's go ahead and back that up with some probabilities. Oh, check that out. There's a bump in your distribution. Oh, these are kind of drawing a lot of tail risk up here. Well, good thing I added a new feature. So let's see, that's about 3% up. You can actually set a max range right here. So, boom, 3%. It'll draw up to about here. And that way these bins won't be so big. And you can do the same thing down there, but yep, there you go. So yeah, we top out here about 22% of the time. So it's quite unlikely you top out here outside of especially bearish trading days. But if you were especially bearish, you know, the setup would have probably looked something along these lines. And then you're targeting maybe down here. So who knows, maybe you're already decided to hop out. That trade, in hindsight, occurred. I don't know. Maybe we need to check out the DXY and just see how the dollar space is going. The DXY is up today. You guys had positive expectations last week, so I got to set that like that. So you guys were net correct. We did close last week above last week's open. So last week was a green week. And if we look over here, it's a green week last week. So let's go here. Load up a 2-hour. So it just has a little bit more extra data. Well, that looks like we're at a top for the day. Unless you think we're going to go up here, where 75% of the time we go up here. So maybe you have a setup that looks something along these lines. Let's go ahead and check out maybe euro dollar. Oh. Check that out. So euro dollar probably then has a similar shape to it. You can see the yield differentials are now coloring the bars. So for euro dollar, that trade will look something along like these lines, just like a low at that prior low. And then, yeah, taking it up to here or to here. Either one is valid. Yeah. We could also use an end of day expectation. So these are your probabilities of where you typically end the day. So this is saying you could just end the day going sideways, but more likely you're probably going to end the day up just a hair. So something like that. You literally end the day up here somewhere. So with that in mind, I still have a slightly dollar bearish expectation for this morning. But come the economic data points, that's really gonna set the mood for risk on or risk off. Specifically, what I'm looking for just is are the prior numbers beat And are the forecasts be like trade balance and imports exports out of China? Imports are improving, exports are not, and their trade balance of trade is actually going down. So seeing that go up would be welcome. And balance of trade also went down in France. Current accounts went positive. Actually, so that's all good. Yeah. And if these continue moving lower, that would also be good for the euro. Yeah, so I could see later in the day, this is technically somewhere around here in the day, so somewhere early tomorrow. So you could see maybe a pop that goes like up to there. Or at least it just continues up until this time. One thing that'd be interesting to look at is how does this day usually perform in history? And we can go ahead and look at the seasonal forecast indicator for that. And it's actually quite bearish. The seasonal expectations for the trading week ahead of us is actually quite bearish. This 10th trading day, which is actually Monday of next week, so literally a week from now, that's what this 10th trading day of August looks like. 76% of the time that day is red, and the net expected value is, pretty bad too. Okie doke. That's actually a bit of a rain on the parade. So we need some non-seasonal moves to see euro dollar move up during this period of time. One thing I will also share based off these indicators here. Oh, I almost forgot. I have to update my settings because we're in a new week now for pivot probabilities. So anyone who's watching this stream and has pivot probabilities, it's time to update the weekly settings. After this stream, I'll post a message in the chat, in the pivot probabilities chat. But for euro dollar, you got some wide range down here for where your low could occur. And over here, you got a pretty wide range for where your high can occur. So this week can be particularly like a whipsaw. It can just go up to here and then down to here. Based off pivots, it's effectively range bound. But based off the probabilities, it's insanely volatile. This week can get pretty volatile. So probably a good reason to exercise some caution if the volatility is expected to go up. And so far, this trade plan is working out. So either up here or, really, you could just take it to the end of the day. So let's leave it like that. Take it for what it'll give it. Take it for what it'll give. So guys, go ahead and let me know if you want me to check out some more charts with these tools. Maybe give some more analysis on some of the economic events. On my email, because I haven't checked my outlooks this morning. Let's see here. Macro Ace, light data for the week. Yep, that's the impression I had. And Macro Ace actually is a free service by Financial Juice. Yeah, there we go. Financial Juice has this free service called Macro Ace. Let's see here. Key China data in regards to balance of trade. Yep. let's see here, ranges and deviations. Anything useful here? Chinese exports year to date is expected to go lower. Imports are expected to go higher. And their balance of trade is expected to fall by 600 million. Yikes. Okay, that's not fantastic. And it looks like we have mostly downside surprises for the German inflation we were looking at. And do we have any downside surprises for the US inflation? For month over month, we have some upside. We have some upside potential. Some upside surprise potentially on August 10th with the US CPI. Yeah, outside of that, there's all this stuff should just be in line with market expectations. That things probably aren't going to get phenomenally better for the world economy going into the third quarter here. We're probably just going to be trucking along. But the improvement in inflation metrics out of the West will certainly help the Western G7 currencies garner some strength. Let's see here. How about NZD? USD. Oh, USD. Oh, wow, check that out. Nice little bounce. So it looks like enough support's starting to finally come in here. Oh, check that out. Nice little bounce right there where you got your little bump in your distribution. Yeah, surprised it hasn't gone up to here yet in the 61.20 range. Let's check this out for the week. Let's see, where are we at for the week? Yeah, so something like that along above to here, from there. That looks pretty darn good. And that looks like we got some tail risk we gotta cut off. Yeah, see that? Tail, tail, tail. Okay. Let's go from here to here. Here to here. So let's call that like 4%. 4% minimum range. And that should make this a lot more legible. Yep, it sure did. So if someone is still bearish on New Zealand, they probably got targets of here, just below the prior swing low, which, you know, there really isn't a whole lot of marginal value out of targeting that as a bear. So somewhere down here, which is actually this bump in your probability distribution week is actually right at the 6 handle, the 0.6 handle. So yeah, I'd say once you get down below this low, watch out for 0.6 as a risk. Like that. Yeah, how you're going to adjust your stop is probably going to be based off of more recent price action. And because we don't have that price action, you can't really set a stop on that. So right now it looks like it's just ranging for as far as the weekly distributions go. Yeah, this also has to get set based off of more recent price action. Let's see how. Yeah, again, probably bottomed out for the day. The dollar probably topped for the day, so there's probably some margin that'll be short the US dollar. Yeah. So things should be pretty straightforward from here. Let's see. Should probably take some requests if anyone's got requests. USD CAD is another one I like to trade. Hey, check out that weakening. Is it time to get out of this trade? Is it because I've been holding USD CAD long since literally the Pico bottom? I was like 2 pips off from that. Very excited about that trade. But yeah, likely topped out for the day, but how about for the week? Are we already topping out here on the week? I mean, based off the month, no. Yeah, so I'd be concerned if we started trading it around 333. Around 333 is where I'd get careful, because from here to here, yeah, you could see a lot of Canadian dollar strength if you go from here to here, or like all the way back down to here. Yeah, I'd certainly be on the more careful side there. But right now, just because you got a red bar doesn't necessarily mean things are bad, because the yield differentials are actually quite positive. At least that's on a 12-hour. Let's see here. Wow, the yield differentials are actually getting even more positive here for the month. Yeah, would not be surprised to see 135. So long the yield differentials continue to stay super positive, I would not be surprised to see 135 at all. No. Isn't that kind of hilarious how this peak in the distribution comes right out to 135? Actually, that looks like a bit of an error. Let me go ahead and turn off these the max range thing here, so then it'll expand. Okay. Now let's go ahead and reset. So here to here, so it's called that 10% max range. You do have to adjust it depending on the time frame. Maybe this will be the next thing I automate when it comes down to this indicator. Note how the percent lines stay exactly the same. So yeah, there's your 135. That was me, that little ding. And then this is your tail risk of 138.5. 1.385 is like that's like this prior high. Isn't that cool? I was actually talking with somebody about the implications of using this type of indicator for trading. And I think the most elegant way of using this style of trading, the best way to put it, is instead of in most technical analysis where you look left to then see where things could be in the future, with statistical indicators, you look right and then remember, oh, I can look left. You're always looking forward with statistical indicators, and then looking left if you got extra time, instead of looking left to make your trade plan and then drawing right. Because it's like, oh, here's where you can get most of your lows. Well, which of these areas do you buy? Which of these highs, which of these lows is the true bottom out, is the true top out, right? Sure thing, Lewis. Because yes, nicely, I'll go ahead and look at USD Swissy. I got no problem. USD CHF. And let's look at it for the day and turn off the yield differentials, because on Swissy pairs, the yield differential is usually determined by the non-Swissy pair, so no real differential there. Okie doke. Oh, we got the range just totally blowing up again. Let's see here. Let's call that 3%. Yeah, I would not be surprised if the low for the day came in, especially if you came into this day having a particularly bullish bias. Because 20% of the time, you do bottom out here. Yeah, you could see a little bit more movement higher, but yeah, once you get up to here, let's say if you move up from the current price to like another 1322 pips, that could be the top for the day. Otherwise, there's this gap right here. See where the probabilities get super low, like 1.4, 1.2, 1.6, 1.16. Once you cross this line, you go into these lower probability zones, and that'll lead you to likely going to the next most likely probable zone, which is up here. So if you're able to successfully move up another 26, 27 pips today, it's not moving just 26, 27 pips. It's probably going to move 27 to 60 pips. And that's just something called thresholding, right? So you just figure out, oh, very few percent of the time, very few occurrences of your top for a trading day occur here. So your next most likely occurrence is way up here. So if you cross this area here from a likely zone to an unlikely zone, you'll probably end up at the next likely area. So all in all, this is also not that bad of a stop either for any shorts. And considering the very short-term end-of-day US dollar bearish bias that we got, I would not be surprised to actually see this as potentially the top for the day. Let's look at the closing odds. Oh yeah, a short up here would have been phenomenal, because it's something like 93, 94% of the time you close a given trading day below this little blue line right here. So a short there means roughly 90+% of the time you end the day in profit. Yeah, that looks pretty darn good. However, I mean, if we were looking at this distribution and you're looking at, oh, where do we end up closing the day? Most of the time you close the day in this area right there, because that's where you have most of your probabilities, right? When you look at these things here, the biggest probabilities are right here, and that's what makes the bump, and that's what makes the histogram here, this bump, actually big. Is the bigger the probability, the bigger the bump. And there's actually quite a lot of people. I mean, I don't know if there's actually quite a lot of people, but I know one person, and also myself, because, you know, I said, hey, you know, there's this way of also interpreting these indicators, where once you get past these 90% and 10% close probabilities, that's the trigger for looking at either seeing tail risk or really quick buys, and then you snap them up for as much as they'll go. Because effectively what this 90 and this 10 are saying is 90% of the time, the close for the day is below this line. And then this is just in reverse. It goes from 0 to 10 bottom up. And this is saying 10% of the time you close below here, which means 90% of the time you close above it. So with that in mind, these are pretty decent thresholds. But looking at the way that this thing is shaped, you can kind of see how it has a skew to it, right? How this is your peak in your distribution and it goes like this before you get to your tail risk. It's like 50 pips till you start seeing these very low probability odds. Compared to from here to here, this is like 108. So there's a bit more uncertainty and spread around your closing odds when you move and trade around these prices. A bit more uncertainty compared to right here. It's like, yeah, most of the time you're probably closing somewhere in this 50 pip range, usually on the day. So maybe there's not a whole lot of pullback room here on USD Swissy, but if you go ahead and you look at like euro dollar, right, it looks like it's in a better spot, because if you look at this distribution shape, oh look, most of your closes for the day are roughly around here, and we're roughly at the bottom range of where 50% probability of your closes are, right? So I'm saying 50 because this is the 75th percent probability line right there, and this is the 25th down here, and 75 minus 25 is 50, so 50% of your closes occur between this line and this line. At least the probability that you close between those two lines is 50%. Anything else you guys wanted me to cover? I mean, maybe it'd be interesting looking at Euro New Zealand and Euro Aussie, because those have got quite a lot of traction, and you can see from last week's trade plans, we really knocked those out of the park. So let's go ahead and look at it today. Oh, we're already at that 25th percent. So yeah, sure, it can move down maybe a little bit more, but is it going to close down here? Only about 25% of the time does it close below that line. So maybe, I don't know, it depends really on your risk tolerance. Let's look at our likely lows. Yeah, that could be a likely low for the day on Euro New Zealand. Let's see. If we were to set up a trade plan for this, what would it look like? Well, we can go ahead and set the stop to be maybe 25 pips. So that's 25. And then take this to end of day. So something like that. From the current price. And end of day probably means only like a slight movement higher. Or if you get lucky, a movement like way up into here. And you know what? This kind of makes sense. This kind of makes sense to me, because the expectations going into the European inflation data with Germany. It looks favorable, and the expectations for the China data doesn't look favorable. So maybe you see this buying into end of day, and then that leads into continuation on the following day. So real quick, I'm gonna actually timestamp this. And which one should I timestamp? I mean, I'll timestamp the more conservative one because I don't know what's gonna happen. So I'll just stick with the conservative expectation that it just effectively goes sideways from here. And this is probably the lower edge of the trading range for the day. And then it does something like that. Does that sound good to you guys? Does that make sense? How I kind of came to that interpretation? Because it wasn't just me interpreting the probabilities there in those decisions. It was also, hey, what's going on with the economic data for the week ahead? Oh, what assets are likely to have some sort of exposure to those pieces of economic data? And then actually coming down with a bias after looking at the forecasts and seeing which side, positive or negative, to those economic data prints are more likely to have a surprise alongside the expectations. So with all that information in mind, been going on for about a solid 50 minutes. I went ahead and demoed out some new stuff with the indicator. And every day we'll be going over some daily trade plans here in the future with the cool new tool. So thank you guys for hanging out. It was a pretty chill stream today, I'd say. Not a whole lot going on, and truth be told, a lot of the commentary in the outlooks that I got today was along that line of there isn't much to do today other than just wait for what will happen in US earnings and the economic data that kind of starts sometime tomorrow and the rest of the week. So this Monday it doesn't have a whole lot going on. We'll have more to talk about, and we'll be able to realize more things actually going on in the markets when those economic data points come out. Trends, breaking of lower lows, breaking of higher highs will become more clear at those points. Alrighty, you guys. I think that'll be that for the stream today. Thank you guys so much for watching. And I'll see you tomorrow, 4:30 Eastern. No, 4:30 Pacific, 7:30 Eastern. Alrighty, guys. Thanks for watching. This is a nice little chill stream today. I'll see you guys tomorrow in a bit.